This is not my thing. I am not a techie, obviously. Okay, so anyway, no net income. On page 819, we begin to see the financial statements of the not-for-profits. This is by FASB. 819 is the consolidated statement of financial position, which looks like a balance sheet. You know that a balance sheet can be called the statement of financial position. You also know that consolidated means that this particular Child Fund International has at least one subsidiary. Are we together? Everybody good with this? Any questions about that? Notice this particular one is not a classified balance sheet. No current assets line, current liabilities line. Receivable from affiliates, that would be the subsidiaries. Grants receivable. Florida Southern applies for grants. City of Lakeland, well, we did those last time, didn't we? Didn't we have in our multiple choice some grants where the city had a grant from the state? And all right, so grants receivable. Not-for-profits can apply for grants. And sometimes that's the only way they can stay afloat is grant money. The problem is that the donor who gave the grant, or the state or the federal, can impose restrictions. You know, you have to not be discriminatory, and there are some Christian organizations that will not apply for grants because of the church and state thing, and you can't exclude people from membership to get this grant money. And we, in my personal, I don't know about your church, but in my church or your synagogue or wherever you worship, unless you meet with our deacons and you hold to our statement of faith, you can't become a member. So so for us to apply for a grant that would require us to let in everybody as a member, we can't apply for those grants. Does that make sense? Grantor imposed restrictions as well. I'm just trying to give you the overarching not-for-profit world. And I can only do that with the things that I know. So that's why I'm using the things that I know. Just easier for me. Because that way if you have a question, I can probably answer it. Accounts receivable, investments, beneficial interests, and trusts. So oftentimes you can have people who have given money in trust, property, plant, and equipment, and then some liabilities, not a lot. And then notice we don't have stockholders' equity. We don't have retained earnings. Once again, we have, and we don't have fund balance like we did in the city, right? What we have is net assets, which is assets minus liabilities. Says what it means what it says. But please notice there are three classes. This is critical to your understanding of not-for-profit. Unrestricted, temporarily restricted, and permanently restricted. So the endowed chairs at Florida Southern are permanently restricted funds. Temporarily restricted, the interest and dividends goes there until it is used to pay for the salary and benefits of the person with that. Never will that be unrestricted. It's never there just to pay for Florida Southern's general budget. If when you become rich and famous, if you wanted to give back, you could join what we currently have is called the Spivey Society. It costs $1,000. Faculty can do it for half of that. And you give $1,000 and it goes into the unrestricted part of Florida Southern College. It's not restricted to anything. Now, when we do our 6-man club, which is the booster club for the basketball team, and when we do the volleyball, I'm sorry, I never did the soccer. I'm sorry, Morgan. It's just hot out there. Anyway, we are boosters for volleyball and basketball. And when we give to that, our money is going to just the basketball program. So it is temporarily restricted to be used for that program. Does that make sense? So different types of net assets. And what's really important is to know how to do the transfers between the classes. Transfers between unrestricted, temporarily restricted, and permanently restricted. Probably permanently restricted will never have transfers, but the unrestricted and the temporarily can be transfers back and forth. Also, what we would normally call a statement of operations or an income statement on page 820 is your consolidated statement of activities. You need to know what's on these particular statements. And please notice that you have the three columns: unrestricted, temporarily restricted, permanently restricted, and then the total. The totals, of course, tie to that at the bottom of this page, net assets at the end of the year, the 23 million number. If you go back a page, those are the same. That bottom line there is the same as the previous page in the equity section. Do you follow? So what we've got is, this is a bit like a statement of cash flows combined with, well, it's really more of a statement of cash flows. How the money came in, how the money went out, if you had to compare it to a for-profit financial statement. It's more like a statement of cash flows because you are putting net assets at the beginning of the year. Remember how you do statement of cash flows? Change in cash flows, or change in cash for the year, plus cash at the beginning of the year equals cash at the end of the year. This does the same thing but for net assets. So it's not a cash flow statement. It's a net asset flow statement. Do you see the similarity and the difference? All right. Also, notice please that we do have public support. That would be your donations. These are the categories on your consolidated statement of activities. Public support. In this particular one, they have some sponsorships, and then they have their donations, the contributions, general, major gifts and bequests. There's actually, at Florida Southern, you probably maybe are aware of this, there's a whole staff of people to raise money for Florida Southern College. They're called the Development Office. And there are a couple of people who are in charge of only major gifts. Their job is to find, like Mr. Becker for this, who gave $5 million for this building. That's their job. And then there are people who are responsible for the annual fund. Then there are people that are responsible when we have a capital campaign. Okay? So all those people over there, their jobs descriptions change sometimes, and they go back and forth, but there's a whole bunch of people that do nothing but raise money. I would rather stick a pencil in my eye than to have to do that, personally. That is not my thing. But I once talked to somebody who was a professional fundraiser, and I said, I admire you. And they do it for a number of organizations that are somewhat related. I said, but I just hate to ask people for money. They said, well, we don't look at it that way. We look at it as there are people who want to give money, and there are organizations who need money. And so it's our job to find the right people and help them figure out where their donation best fits their purposes. So when you look at it that way, it's a little easier. I'd still rather stick a pencil in my eye. But I guess if you ever had to raise money, you need to, if you're told to, because the dean of the business school, the new dean, one of his jobs is to raise money for the Barnett School. I would never want to be a dean. I don't even want to be an associate dean. I just want to be a teacher. So anyway, and then they had some grants. So that was their total public support. That's the support that came from external, a non-exchange transaction. All of those are one-way monies. Their money's coming in without anything in return, no strings attached. They may have restrictions, but they're not getting anything for it. Do you follow what I'm saying? A grant is just money coming in. It can be for a purpose, but nothing is going back to them. As opposed to, the next category is revenues. That is your exchange transactions. Does that make sense? So we have our revenues where somebody buys something. When I was in Campfire Girls, it's their Campfire USA, we had to buy our uniforms, and we had to buy our book, And so there was a little store, and that would be on their particular statement of activities, that would be called revenues, where my mommy wrote a check for my uniform with the little scarf. When I flew up from Bluebirds to Campfire Girls, I got a scarf with a little knot, slip knot thing. Yeah, Woe he lo, work, health, love. And my book and the badges, and my dues. I'm not sure I think dues probably are considered revenues because they cover the cost of any awards that you put on your uniform and that kind of thing. So my guess is they are revenues. Is anybody campfire? No. Okay. How sad. They have a really neat fundraiser. They do the Kentucky Derby each year. It's expensive, but that's their big fundraiser, and everybody wears a really cool hat. And so you can have a derby party in Lakeland, Florida, and not have to go all the way to Kentucky, which would probably cost you, well, first of all, for your hat ladies, would cost you a minimum of $500. You'd have to go to a milliner, and they have plenty of them there in Kentucky. And plus then, once you buy the hat, you got to buy the dress to go with it, of course, or vice versa. And then you got to fly up there, and you got to stay somewhere, and you got to have the ticket. So your $10,000, you could give that in just like, I think it's $250 a person here for the Derby party. So if you ever wanted to do a Kentucky Derby party and support a good organization at the same time, Campfire is your place to go. Google it. All right. I've never gone, but every year I get that invitation. I think I'd really like to do that because I know I'll never go to the real Kentucky Derby. And then they watch the race on big screen, so kind of cool if you're into that. All right, the net assets released from restrictions. Do you see that? Coming out of temporarily restricted, going into unrestricted. That's your transfer. Any questions on that one? Notice nothing came out of permanent, right? So it's kind of a one-way. And then your expenses, the program expenses, the supporting services. Look under supporting services. And I told you that every 501c3 organization and anything that allows you to take a deduction for a donation to them, whether they're 501, and we've talked about 501c3, have we? What's 501? Internal Revenue Code Section 501. Paragraph C, subparagraph 3. 501c3. Florida Southern is a 503 something. I'm not sure what we are because we're an educational not-for-profit. Whereas you've got for-profit colleges and universities that are not 50 anything. They are regular businesses with stockholders' equity and stockholders. So you've got for-profit colleges and universities. Got to be real careful giving your money to them unless they're accredited by like AACSB and SACS accreditation, because since they are for-profit, there are a lot of pressures on faculty to give A's and B's so that people will keep coming. They're almost always 100% tuition driven without an endowment. And you lose a student, you've just lost revenue. So the teachers have a lot of responsibility to kick them on through so they'll come back for more, which doesn't always allow for high expectations in learning. So I'm not saying that they're bad. I'm just saying be careful. All right, but I told you that any 50 whatever organization, you can go online and figure out how much their program percentage is out of the dollar. And that for this one would be this $198 million divided by their public support of 67. Wow, that's really, they're doing really good. So total program, $198 million, using only total public support of 67. That's 3 to 1. That's pretty really good. All right. And then their fundraising, that's always on their statement of activities. You've got to have it there, and they have to give the percentage that went to the commercials with those starving dogs, right? You know what I'm talking about. You watch them too. You don't want to, and you want to turn your face away, right? But they're on there. The management in general, which would be like your clerical, the executive director, the office rent or office, the depreciation, and that's all your management in general is supporting services. And you got to have that. That's why they separate the management in general from the fundraising. Yes, they're all supporting, and that means those cents on the dollar are not going to program. But they're still, they're necessary. You got to have an office. You got to have somebody to answer the phone. You got to have somebody that's doing the bookkeeping or a CPA or whatever. Does that make sense? I could just close that. All right. So, and then notice the non-operating gains and losses. Realized gain on investments, you know what that is. That's your interest, dividend. Actually, that's not interest and dividend. Realized gain would be gains and losses. Net. Losses are not there. So in this particular one, they had a net realized gain from selling their investments this year. Realized means you've sold them, past tense. The unrealized loss or gain on investments is losses for this particular organization. And that means they haven't sold them yet, but they have a holding loss right now. Remember that with your AFS and with your trading, and remember all doing that. That's what that is. Change in value of trusts, that happens at times because the trusts are usually supported by investments. And then change in accrued liability other than net periodic costs. That would be like your pension liability, accrued benefit liability. And for this one, this year it's $4,732,917, which I saw. No, I guess not. All right, and then changes in net assets. Okay, that's your 820. The next one is on 824. I'm doing the lecture while you're still a little bit awake. And y'all didn't have Dr. Harden's class today, right? It's over. So you're supposed to be fresh. Okay. Except now all those things you put on the back burner while you're taking her class. Yeah. Yeah, I'm sorry. So we should get out early. Yeah. I wasn't told that classes were canceled. So I didn't cancel. We only had, the one that we had that I was gone makes us down to 7, and then the one for the final exam, we only have 6 times that we actually talk about curriculum, so it was important. Okay, so in this one, this is a breakdown. This is a schedule. But it's called a statement. It is required for not-for-profits. It is their statement of functional expenses. Notice, please, that their total program expenses, I'm about the 1, 2, 3, 4, 5, 6. I'm the 7th column on page 824. At the very bottom, the 198 number. If you go back to 820, there it is. On, where is it? Oh, come on, I just saw it. Program, there it is. Under expenses, 198, 247. Also that 44, 243, 833. So this is tying to your statement of activities. Does that make sense? And it must. If it doesn't, you screwed up. So it should be a linked spreadsheet in in accounting to make sure it all ties together. Total program services, total fundraising, total management in general, total supporting. And then for purposes of comparison, they do last year's, I guess I don't know why they did that, but they've got that same column again. What did they do? No, they did their total expenses. So total, because that's the 242 total expenses. So those are your statements. Any questions about the statements? On my one page, the temporarily restricted. The temporarily restricted, quote, this is in your book, are restricted by an outside party, often a donor, for a particular use or for use in a future period of time. When the restriction is satisfied, these resources are switched to unrestricted net assets, which was that transfer that you saw in the statement of activities. Those were the things that the restrictions had been satisfied, and they moved them to unrestricted so that they could accomplish their purpose. Thus, on the statement of activities, they are shown as being reclassified as unrestricted or to unrestricted. Permanently restricted, this again is my one-page outline for you. Quote, are expected to remain restricted for as long as the organization exists. So that endowment can never be spent as long as Florida Southern is a viable corporation. It should never, ever be spent. Now, Florida Southern's not going out of business. But if it did, there are rules about what would happen to those endowments. And they are probably in the endowed contract. Okay? Which I have no idea. And Florida Southern's not planning to go out of business. But you have to prepare for every potential. It's in stocks and bonds and mutual funds and that kind of thing, and it belongs to Florida Southern, but it can't be used. But it's making money, and that money is for one purpose, and that's for the salary of the person that holds the chair. So this is all colleges, all universities that are not for profit have endowments. And you could probably find the size of the endowment for a lot of organizations. The 990, it may be on there. That the Form 990 is an IRS form. There's no tax due on it, but it is the income tax form for a not-for-profit organization. And certain parts of it are available free of charge and open to the public. For a fee, you can download the whole thing and see all the details. So, I really should pull up Florida Southern's 990, but you could do it on your own time. I'm not going to do that. Statement of activities, statement of functional. Okay, so let's do some multiple choice. I didn't bring my candy. If I need to go get it, I'll go get it. But let's see how we do here. Thank you. Okay, this time I'm going to stop it